So our next paper now is on the alternative distribution channels and their impact. This is going to be presented by Mr. Anselmi. But now I would like to introduce to you Mr. Frank Kitende. Mr. Frank Kitende is a lecturer at the Institute of Finance Management in the meantime. He is a PhD holder from the University of one of them in Netherlands. The name is so difficult. I don't know how to pronounce it, Dutch. So it's just from the Netherlands. Be comfortable, Frank, for that. His discipline much is on ensuring agriculture in developing countries. That is the area he really majored, particularly to approach to reach poor farmers. Briefly, that is Frank Kitende, and Frank Kitende, please come over to the floor.
Good morning, everybody. Dear the guests of honor, the Commissioner of Insurance Tanzania, the President TIBA IIT, I would like to take this opportunity to congratulate all of you for this wonderful preparation for this conference. It was quite well organized, but there is a point of correction a little bit from what has been introduced. Haven't yet pursued or finished my PhD. I'm just in an introduction and proposal writing, actually. And it's in agriculture, the penetration to reach the poor farmer. So this is my first year, so I'm still in the start. Thank you very much. Our next presenter is Mr. Anselmi, my colleague. He used to be my fellow student in advanced diploma and master's as well. He is a consultant trainer for government and international organization on planning policy, regulation, and strategy. He has been a country microinsurance coordinator in Tanzania, TIRA with FSDT. As a businessman and CEO of Akravia Insurance Broker and risk consultant, he has been actively developing microinsurance products and stimulating distribution partnership. He is the director and professional development at the Insurance Institute of Tanzania. He has served in several task force within the insurance industry and outside geared at engineering growth of financial sector and inclusive economy, such as secretary to the Tax Reform Committee of the Insurance Industry in Tanzania. Anselmi is an associate member of Chartered Insurance Institute of Security and Investment, London. He held a degree of Masters in Science in Marketing and undergraduate first class in Insurance and Risk Management, and a certified Cisco Technical. Anselmi has served as a lecturer at the Institute of Finance Management, member of the Insurance Technical Team for World Bank and Bank of Tanzania in the Financial Sector Supporting Program, Africa Center for Strategic Studies, and has worked with the various national and international organizations. So let's put our hands together, welcoming Mr. Anselmi. Anselmi, welcome.
Good afternoon. Or is it still morning? Okay. So, my talk today is about alternative distribution models, but I decided to title it Floating in the Space. Now, today in the morning, as we were having our breakfast, I had discussion with some colleague, and a certain lady asked me, where is our market going? And I think my response to her will be now. Then I didn't respond. I kind of tried to diverge and said about this and about that. Our marketing is floating right now. We are floating in this space. And as we are talking about the alternative distribution models, and we agreed that we'll spend not more than 15 minutes to try to incite your mind around the alternative distribution models, we will see how floating are we, and what can we do to adjust ourselves with the change in gravity. You know, the gravity in the space is different from the gravity effect that we have on the Earth, right? Right, so how are we going? You know, the convener and Madam's Vice President in the morning, she mentioned that the paradigms have shifted. Things have changed from a 50-something% contribution of the insurance brokers to back to 40-something, and maybe could be sliding. So we need to do something. We need to get a hold in these changing circumstances. So the floating space talk about alternative distribution will be around the general picture of what are these alternative distribution channels, particularly for insurance, what has been the impact, what is the trend around the world on this distribution, can we validate their contribution, the significance that are attributed to these options, can we validate them, are there evidences that shows they bring such impact, how can we optimize on these alternatives as brokers, also as insurers? And then we'll conclude with, well, a crazy remark on what Facebook is doing with the Libra, right? Now they are getting into the space that we are in. This company with a volume interaction of 2.3 billion people every month is getting into the financial sector. And basically they are gearing at being a middle person where we are, taking our place. So what is the context? So our theme is around poverty and inclusion. So poverty rates in 2016 were at about 26% of our population. So if you are looking at a market, you have a market of economically viable clients of more than 70%, so maybe 74% of people who can pay for insurance. That is the market that we have. Our GDP is growing at a pace of 7%, so our economy is growing, right? So we'd expect the coverage in insurance to grow in the same or in a greater pace than the economy. That is what the principles say. So if the insurance is digressing, then there must be some huge question marks on what is wrong if the economy is growing and the industry general growth rate is declining. Financial access. So 64% of our population, according to FinScope 2017, has access to financial services. 64% of the population. So that will include banks, SACCOs, M-Pesa, Tigo-Pesa, etc., right? But for insurance, that part, we only have the 15%. Only 15%. And of this 15%, we are told that, according to the research, is 11% is social insurance, and only 4% is from the conventional insurance. Where do we want to go? We want to go to a 50% population coverage by 2028. And we want to support the Sustainable Development Goals on a global, if you put a global perspective. So this graph here talks about the contribution that insurance industry has in the inclusive insurance. So this is a landscape survey which was done in 2015. And for example, today we had a lot of talks about agriculture insurance, and we were told that by then, coverage was at a 0.02%, right? That was agriculture insurance in 2015. So we are doing now the landscape survey again to see where are we on these places. So there are different channels that have emerged of recent. And the attention has been significantly on the smartphones, social media, the internet as a platform. How can we, or how is it being used to reach the population? So there have been increased customer interaction points. That is the benefit of these alternative distribution channels. They have enhanced the opportunities to engage with the customers, right? But the thing is, not many of the players have had very good experience with these alternative distribution approaches that engage. So you need to be very slick or savvy to have frameworks that will give you results that you intend. Otherwise, the outcome may not be as anticipated. So what is happening today? Today, for example, we are seeing Amazon, right? Now with the richest person on the earth now is the owner of Amazon, Jeff Bezos. Now, Amazon is getting in insurance as a corporate agent. So they are looking to register themselves in India, and the studies indicate that, now that is the importance of research, about 18% of their consumers will want to buy either a car insurance or a home insurance through the platform that they have. So if you do an estimation of the 107 million people that uses Amazon, they will be selling to about 35.5 million people monthly, a home or another insurance. But what else are we seeing is there are these other giants that have already registered their corporate insurance agencies, particularly, for example, in India, you have Walmart, you have Alibaba, and you have Berkshire Hathaway. Now, the study indicates that they will capture at least 30% of the market using their platform. Now, I haven't started, and I'm told that I should summarize. So I will try to summarize, right? So we have the traditional models that we know that have been using years and years, right? So we have the agents, the brokers, we have the direct business, and we have the large financial institutions. What are the alternatives? There is a huge array of alternatives that can be used, being it retail points, such as supermarkets, agro-dealers, etc., socio-economic groups, the churches, the political associations, sports groups, etc., right? Utility companies. TANESCO has about 35% access of the population, right? The MNOs, so they have about, 44 million, we're told, of the subscribers that are into the MNOs out of the 60 million population. Bank assurance, the talk of the day. Microinsurance agents, we don't have them yet, but financial institutions, SACCOs, cooperatives, etc. The postal offices, now they are doing Forex, right? They have open bureaus. They have the infrastructure across the country. The technical service providers who are using the digital platform to offer solutions, right? So they may be using artificial intelligence or robotics or telematics, cloud, etc., right? We have all this. So what should be their role? What role do they play in the distribution? Now, what is the impact of this alternative distribution, for example, in our market? Looking at the landscape survey of 2016, the MNOs, right, they had 50% of the distribution. And the brokers, in the inclusive insurance, they contributed only a 4%. All right? So the question is, why? The thing is, this indication, these statistics, kind of contradict what the global consensus is on the role of alternative distribution in insurance. For example, you will see that in Asia Pacific, for example, the insurance agents and basically the brokers, they do influence or transact the majority, all right, segment of the inclusive insurance business, or the business that focuses to the large segment of the population. And you have the likes of the telemarketing and the technical service providers, the mobile phones, with a very small portion. So the question is, why, and what can we do about it? So it starts with, how do you design your alternative distribution channel strategy? When you want to engage an ADC, how do you go about it? So you want to understand your customer needs. Even in product development, for example, when we speak of, you can ask, people can tell you that we have introduced a new product, right? So maybe we need to discuss it or something. Then when you ask, for example, this product, where is your market research? Can we see a report and we see how you came about to have this new product? And then they tell you, we just went to this bus station and we asked the 2 and 3 people, and then we concluded that there is this need, right? Assessing the needs, clear needs of your segment, is paramount to success of any distribution channel that you may plan to opt. What are the objectives of that channel? And do they align with yours? Does the objective give them incentive to offer your product? Like an M&O objective is not to sell insurance, right? It's to sell airtime and maybe internet. That's the priority, right? So how do you align the objectives? Or how do you find a partner with objectives that are similar to yours and employ it? And then what are the major channels that you have? That is in terms of reach, and also the reflection on the cost. Because you can have a channel that has a reach, but it is too expensive for you. For example, we know that all these technical service provider and M&O's options, they will take you to a commission of about 60%, right? A global average of technical service provision commission is 30%. So 60% just for distribution, for insurance, kind of make insurance irrelevant. That is not insurance anymore, because the cost of administration is bigger than the actual cost of risk, and that makes it irrelevant, right? So assess the criteria, right? How can they contribute in client education, for example, in the diversity of products that they do have? Scale, we said about the infrastructure in place. How do people trust this brand and their image of this partner that you want to? What will be the cost? What are the partnership risk? And across the value chain, how each activity can be taken on board. Be very careful of the risks that will be associated with that partnership, and particularly the competition risk.
Please wrap up.
All right, 2 minutes. So you don't want a partner who after 3 months, 6 months of operation understands your product and your model and takes it on, right? You want a partner that you can continue to grow with and avoid the competition risk. So how do we survive as brokers? We have to master the trade, right? Not the secretary said you should not be the post office. Specialize. Don't do everything. Choose one area and be a master in that area. Innovate. Own your product. One of the challenges that we have is, how do we protect the innovation, the intellectual property rights? What can we do? We have a law that is very old, 1972. It only acknowledges patent for only physical innovation. Business processes are not protected. What are we doing about these kind of things? And build partnerships that can propel you to the future. We should do innovations that are transformative. They may take long, as you see the red line. They may take some time, but they will give you the results that is the impact that is higher than the radical or incremental innovations, which will take shorter time, but the impact will not be as significant. And you want to innovate across the value chain of the insurance services. To conclude, the brokers, if you look at this paradigm, our role is here to advise on the complex product, right? So the internet market will be with mass market products, very simple products. You have bank assurers, and then you have the agents, and we as the other specialists. And that model is in line with what is looked at as the role of the brokers and insurance intermediaries in the future, from being brokers to being
2 minutes
advisors. Up. So the potential is massive, and most likely we are not aware. So in recent we have heard about the Libra Association or the Libra Coalition. So this is an initiative that is run by Facebook. This initiative basically is targeting Africa, not any other segment of the market. In the beginning, I mentioned about Amazon, Walmart, Alibaba. They are all already in Asia. The area that is remaining is Africa. So this guy has called upon the heavyweights, right? We have the MasterCard, even here to go Pesa this time, right? MasterPass and all that. We have the Vodafone, we have the Mexico, etc., etc. The heavyweights have come together to exploit the opportunity that we have in this continent. So if we remain floating and we don't find our gears, then we will just find ourselves using the Mark Zuckerberg currency. I thank you for your attention.
Yeah, thank you very much. And I'll call upon Mr. Frank Tende to do wrap up, because they didn't give much time to the speaker to do wrap up. He was still presenting. And then we shall have 2 questions, then we continue another paper, please. Mr. Frank?
Thank you. Thank you for the next presentation. In wrap up, the key things which has been addressed by the presenter, he gave us a status quo, where we are and where we're moving. Our portion in this market, the percentage-wise, it's almost 15%, which is quite very small. The mode of alternative distribution, the tradition, and the different methods which are there in the market, bank assurance, one of it. And he talked about the impact of distribution, the trust, the scale. He talked about how best to design or go opt for the distribution. You should look on the customer need, channel, and so on. So these are the key things which has been addressed by the presenter. I couldn't find anywhere where I can chip in, but maybe I could pose a question based on the penetrations. Now the bank assurance is coming. The regulation is out, and I'm not certain if we have any bank assurance agents registered yet. And the banks has been in the market for so quite, but the penetration is still small. Do we expect having this bank assurance in place registered? Does the penetration or the picture of the market going to change? And based on our regulations, if you're looking at others' regulations, or if you're looking to other markets, the bank assurance, they are quite very good on life perspective, life market share, the premium and everything. And they are very less on general and non-life. And their regulation is quite basically based on individualism, they're to transact on individuals. So how about our regulations? Do we look on that? Or if it's still silence, is there any change we expect for having this bank assurance in the market? So please, if you can talk on that as one of the alternative distribution. Other thing, the transformation. We didn't give the picture. Where are we moving? Based on the agents, agent is not limited to the insurance companies. Even the brokers, they need to have the agents as well. And the question is, how many agents do we have? Talking of the banks, 2013, 2018, it has been increased by agent more than 180%, from 500 to 1,600 plus the agents. How about us as a broker? How are we increasing our reach, our distribution channels based on agents? How many agents do we have? So please address this as well. Thank you. Then we have the questions.
Let me say mine is not a question, but I just wanted to make some comments here. I didn't get time to make a comment on the previous presentation, but I just wanted to buttress two things. One, when we talk about demonstrating professionalism, we are basically talking about trust, and we're also talking about our skills as brokers. For us to be able to remain valid in the market, we have to embrace trust, because people come to us to entrust us with their risks, and therefore they want us really to remain trustful. So for brokers to remain valid in this market, forget about all these things that you have talked about: telematics, robotics, artificial intelligence, all these things that are new, that are coming into place, what we call the fourth industrial revolution, actually. For brokers to remain valid in this market, we have to demonstrate trust. That is the thing that will make people come to us as brokers. But also we have to have the highest degree of risk management. When you go to talk to a client and you are talking about the premium, you're negotiating how the premium to charge, you also have to tell him what makes up that premium. The basics within the premium composition, the expected claims costs, the admin costs, the time value of money, as well as the cost of capital. All these things, you have to demonstrate them so that somebody can understand that he's paying X amount of money, which is worth the risk is transferring, and you are carrying the risk to take it to the insurer. So I think when we talk about demonstrating professionalism and it being valid in the market, we are simply talking about being trustful, and we're also talking about demonstrating before our clients that we are experts in risk management. That is one. Now let me go to the second presentation. There are two phrases in insurance. When we are doing insurance course, two phrases they teach you. The first one is that insurance is sold, is not purchased. That is one. The second phrase is that in insurance, that insurance is the game of numbers, and that scale is everything. Those are two things. Now let me explain why I'm using the two phrases. We are talking about insurance to be sold and not purchased. We are talking about those that are selling insurance to understand the market properly, to be able to place the products in the right place, for the right people, at the right price, in the right time, and so forth and so forth. Now these other distribution channels that are coming in that seem to be threatening our market share and taking away our business, they have been there in the banking industry, in fact. If you might, I might invite you to go to, if you can go and read the East African newspaper of this week. There is an article where they talk about e-money, the M-Pesas and all these things, the way that have impacted, the banking industry. But the banks are saying we remain resolute because we understand that these people have taken our business, yes, but there is business which they cannot take away from us. There is business that M-Pesa cannot take away from the banks. That is one. But also they are saying the banks will remain in place because of trust. They say there is trust that our customers have on the banks, which they don't have on the M-Pesas and so forth. So I think we can borrow from them. They are saying they will remain resolute They are not shaken about all this because they know there is amount of business that will go, but they know there is business that they will continue to hold because that is the nature of their business. So let us also identify the kind of business that brokers can hold on despite of all these new inventions and all these new developments that we are seeing in the market. Thank you. Sorry for...
Yeah, that was quite brief. Okay, another question? Yes, Tine?
Thank you, Sam. Talking of Libra, obviously we're talking e-money there, the concept is excellent, but you are probably aware that the regulator, with all due respect to the commissioner sitting in front of me, the regulator who is on my head in the UK is the Financial Conduct Authority. They have actually stopped anyone from dealing in Libra because there aren't any safeguards in place, financial safeguards, and of course with the new GDPR data protection laws coming, which have come in 2018. There are not enough safeguards available for that to be a safe medium of transaction. But it is coming, these concepts are coming, and I think I take note of all the comments Israel has made. But it is, and this was the concluding statement in my paper in Mauritius at the African Insurance Organization, if the insurance industry doesn't wake up to the changing technologies, then don't be surprised if Apple and Amazon, who have already started, and now of course Facebook and everyone else, starts knocking on your door as a competitor.
Yes. Thank you for this opportunity. I have something to add on also on Libra, maybe for all of us to understand. Libra, what I know about that is a cryptocurrency. So it's a media of payment. Maybe I can say it's a exchange mode of payment is. So for the insurance industry, maybe this may come to enhance you, maybe for medium of exchange, to get maybe in a physical money that we call it a fiat money that nowadays we use. As we see, we have TZ shillings or US dollar or other fiat currency. Therefore, this Libra, I see everybody is fearing it, but this is the cryptocurrency. Then first of all, it cannot be used until our national to put the regulation and the act to be proved, maybe to be used in the country. So in Tanzania, still not yet.
Okay, thank you very much for the inputs.
I would like to wrap up. I think even the answer was got something to say for just only 1 minute. Yes, he was thanking us, and then we have to leave the floor, but I would like to thank you, all of you. And there's one thing which has been addressed of trust. Trust comes with food, but left with on back of the horse. So there's a lot to do with the trust when it comes to business. On the concept of Libra, it was just on the way of manipulating the market, on how to position yourself. Yes, we don't have to be scared as well. There is a lot which is going on in even the US market. The Facebook itself have got a fine of more than 5 billion USD on releasing of the information. It's out there. But it was, I think, a citation on see how can we use this market and how can we stretch our power to reach the poverty or to reach the people down there. Do you have anything to say, or we just end up here?
I know our timekeeper is really serious about time, but you know they say time is making ability, right? that is what basically time is. So yeah, we are in rush, but let's take time to do the needful so that we can progress. So I want to address the two questions that my discussant raised. The role of bank assurance in inclusion. We know the banks have been there. They have been selling insurance. Will they contribute into the inclusion? Or how will they contribute to increase the penetration? So we know, for example, CRDB has a portfolio of about what? More than 3 million people, right? We know NMB, more than 5 million people, right? And then we have all these other banks. They have been selling insurance. It's not that they are starting now because we have regulations out. So the question is, will they support? So the Technical Working Group for Microinsurance was putting in front a submission that there must be a requirement of these banks to have a quota in rural and also in inclusive insurance. That there should be also requirements as to the number of products that they must bring into the market which target the majority of our population and hence now reach the overall objective of having the bank assurance regulation. But in actual fact also, bank assurance works with simple products and retail products. Products that are designed for the majority of the population, the mass market, not the complex products, where now the broker is positioned. The former commissioner put it well that a broker must position himself at a certain point because of the skills, right? So it is in this space that as an advisor of complex risks, these products, there is where the broker sits, but with the skills now to take that role. And so the bank assurer is not, I mean, if we allow the banks to deal with engineering and aviation and I don't know, but I think maybe we'll learn with very expensive mistakes. The brokers and the agents, how are the broker enrolling agents to increase their reach? I think there is where the future is, especially with
Final
the
call for wrap-up. Final call for wrap-up. Thank
you. With the introduced direct sales force guidelines from TIRA, which gives now the broker an open mandate and authority to enroll agents, and I think there is where the future of the brokers in this matter is. So about the Libras, we can continue with that discussion outside. And
thank you very much. You know, this team has been very brief. I thank you all. And now they ask FSDT to come up and give this. And second goes to the moderator.